Welcome to S&P 500 Complete. We cover all 500 S&P stocks with fresh updates every 3 to 4 months. Subscribe so you don't miss any. Let's dive in. This could be huge for Kimberly-Clark. Despite trading at just 17.85 times earnings, a 13% discount to sector peers, KMB is sitting on a massive transformation that could unlock serious upside. We are talking about a dividend aristocrat with 52 consecutive years of increases that analysts think could hit $155 to $160 per share. First, their powering care transformation is already delivering results. They just posted their highest volume growth in 5 years at 5%, and gross margins expanded a massive 200 basis points in 2024. Management is targeting over $3 billion in productivity savings. That's game-changing for margins and cash flow generation. Second, this company has an incredible economic moat. Huggies commands 37% of the global diaper market. Kleenex owns 38% of North American tissue. And these brands generate over 80% of their $20 billion in annual sales. That's pricing power and defensive stability you can't fake in consumer staples. Third, the cash flow story is compelling. They are generating $2.5 billion in free cash flow annually. That's a 5.8% yield that crushes treasury rates. Plus, they are returning massive capital to shareholders with $2.6 billion in dividends and buybacks in 2024 alone, while maintaining a sustainable 1.54 times coverage ratio. Fourth, the innovation pipeline is firing on all cylinders. They invested $560 million in R&D, secured 150 new patents, and their premium positioning strategy is creating real pricing power. When you can elevate categories from value to premium like they are doing, that's how you expand margins in mature markets. And here is the kicker. Major institutions are backing this play. Vanguard, BlackRock, and State Street own massive stakes, totaling over $12 billion. And Piper Sandler just initiated coverage with an overweight rating and $144 price target. Smart money is positioning for this transformation. Now, full transparency, there is one major concern I have to address. Their debt-to-equity ratio has exploded to over 9 times, which is frankly alarming for a consumer staples company. While their cash flow can service this debt, it severely limits financial flexibility and creates real risk if economic conditions deteriorate. That leverage profile is definitely worth watching closely. What do you think? Are you bullish or bearish on KMB? Does that transformation story outweigh the debt concerns? Let me know in the comments.